Hi everyone, let's have a look at my bullish and bearish Elliott Wave scenarios on Bitcoin, including potential trading setups. But first I want to show you how our idea of a fake out happened in 2021. So what we're looking for is this triangle over here, which then fakes out to the downside, where we have the breakout shorters going short over here, stop loss in the triangle, and they expect more downside. And we also have the shorters in this range, and they put their stop losses above this triple top over here, most likely also looking for downside. But what makes most people lose? Well, in my opinion, if everyone is looking at this triangle, the likelihood that it plays out is a lot less. And also from an Elliott Wave perspective, the subwaves inside this triangle do not respect the triangle rules. So what I think would be nice is to see a move back to the upside, trigger the stop losses of the breakout shorters, continue up, take the liquidity of the shorters and all their stop losses in this range for then a continuation to the downside. And if we then go back to 2021, I'm going to show you that this already happened once in the past, and I actually have to think about this. So the people that probably were trading at this time remember what happened over here, because everyone was looking for this triangle over here. But again, the waves inside this triangle were not following the triangle rules, so we were not looking for a triangle. So what then happened? We broke to the downside. Many people shorting, right? The breakout shorters and the people in this range that put their stop losses above these highs. So what then happened? Price took the liquidity of this low over here with this wick. It moved to the upside in a three-wave structure, then grabbing the liquidity at the high over here before then continuing to the downside to eventually put in the low of that bear market for then eventually new all-time highs. Now, I don't expect basically new all-time highs, of course, but it's about this scenario that might play out again, where price moves to the downside, grabs the liquidity, then moves up, grabs the liquidity for then more downside again. And I think that this scenario is a very, very interesting scenario indeed on the Bitcoin price. And then the Elliott Wave scenario that is matching this idea is the one that I have over here. So what we're looking for is an ABC, we're in then a zigzag being a 5-3-5 wave move, where inside this wave B, we then have a three-wave structure, a corrective complex structure to the upside, where an interesting target box is over here between about 30K and 31K, because in a zigzag, you don't want to see this high taken. That's also the invalidation. And then a 5-wave move down, 3-wave correction, and then another 5-wave move to the downside. And then the potential current support that we have over here and been talking about for a couple of days already is this white box between 27.6K and 27.2K. And as you can see, price moved down over here at the moment in a three-wave structure, and it bounced very, very nicely indeed on the 886 Fibonacci, taken from the low of this green A to the high over here. Currently, we also then have at least a little bit of support on the weekly, but it did break with this 4-hour candle, but at least a little bit of support over here. But what we're expecting is a bounce in and around this area. We still have the triple bottom at 27.2K for maybe a bit of a liquidity grab, that if price wants to go to the downside, it could grab the liquidity before moving to the upside. But basically what we're looking for, it is the triangle, right? We're looking at the breakout, finding support over here, for then a move to the upside to then grab the liquidity at the highs for then a potential short scenario to the downside. So that's why these potential trading scenarios are on my chart as well, where one can long in this box over here, stop loss safely below, and then eventually trading it to the upside. Of course, you have your plan, your strategy, your entry requirements. I'm not an advisor, but that is something that would fit the trading psychology triangle fake out part and this particular scenario. We also still have bullish divergences. So if I go to the 1-hour chart on the CVD and I zoom out, then what you can see is we have the low over here, and price is making higher lows already with this low as well as this low. So higher lows, but on the CVD, price is making lower lows on both the blue and the yellow line, which is a bullish CVD divergence. And the target for a bullish CVD divergence between these lows is the highest high that has been made, which is the high over here at about 30K. So that is also why this is such an important target. And just above that high of 30K, we also have the target box between 30.2K and 30.4K, which could act as a little bit of extra resistance for also then the potential short scenario that we have for then eventually more downside expected. So first find some support, then some resistance, and then more downside to go. This is, I think, a very, very interesting idea in combination with the fake out and the question, what makes most people lose? If we then go to the bullish scenario that we have on the medium time frame over here, which is an alternative scenario. I prefer the bearish one, but you always need a bullish one in Elliott waves as well. So what we're looking for over here is that this then is like a wave 1, 2, and then we have another wave 1, for example, over here that is already finished and we're currently in another corrective structure, or this like a wave 2 that is, or this is a 1, 2, 3, 4, and then eventually expect a 5 to the upside. Now what we're looking for then in this corrective structure is starting over here with an ABC, which is then an expanding flat. It took the lows of this wave A, which therefore then makes it valid. This wave B is very, very extended though, but in this scenario it works because then this is a 5-wave structure. This can either be a wave 1, a wave A, or a wave C. So it either then is the beginning of a structure or it is the end of a structure. Now in this scenario, this is a wave C, and we then expect more upside. So then this first move to the upside that we had over here is an impulsive structure in a 5-wave move and then a wave 1, and then we're looking for a 3-wave corrective move in a wave 2 before then continuation to the upside. We of course have the bullish divergences, very, very nice, but one thing I don't like to see for a wave 2 is that it bounced on the 886 at the moment, and the 886 is a rare target for a wave 2. The more common targets for a wave 2 are the 786 to the 0.5, but those have all been taken. So if I actually quickly put on my wave 2 over here, you can see that all of the fibs, all the more common fibs, the 0.786 to the 0.5, have all been taken. Price moved to the downside without any support actually through those fibs, and currently is bouncing on the 886. So that is a very rare target for a wave 2 for continuation to the upside in a wave 3. But of course a rare target is still a target, and as long as price is not invalidating this scenario by taking this low over here at 26.9k, we always have to think about the potential of this scenario on a medium time frame. If we then go to the 2 low time frame scenarios that I quickly like to show you, we then have a 5-wave structure in a wave A. And I actually thought about this now that I think of this, which can be an extended 5th wave. So we then have a 1, 2, 3, 4, and an extended 5th in a wave A, followed by a 3-wave correction in a wave B. And then we have a 5-wave move in a wave C, which is either already finished or this is still part of a bigger wave 4 before a wave 5 to the downside to grab the liquidity of the triple low that we have. But definitely a bounce somewhere in this area might be very, very interesting, right? Also with the medium time frame scenario. And then the final scenario I'd like to show you, which is the impulsive structure then, a bigger impulsive structure where this is a wave 1, a wave 2, and we are looking for a lot more downside. That basically means that either this is the end of something and we go for a lot more downside. So this is a more bearish scenario where this then is a 3-wave structure and now we just move to the downside, or this bigger impulsive structure and then a 1, 2, 3, 4, 5 is part of a wave Y, in this then being the A, this being the B, and this being the C. So again, this move retraced to the 886, which actually is more common for a wave B than a wave 2, which then is absolutely fine in this being an ABC. The problem is for me in this scenario, that's why it's an alternative, is that this W is so short, this X is long, and this Y is even longer. So it doesn't look too nice, but nonetheless something to keep in mind. And we do have news this week coming up, so make sure that on Wednesday, which is tomorrow or today, is it today? Is Wednesday today? No, it's Tuesday, right? Yeah, it's Tuesday. So make sure that on Wednesday, 2:30 p.m. you trade safe because we have some new stuff coming up. This is Central East European time, so make sure to check your own time zone. But on Wednesday, I was confused by this green arrow over here. Make sure you trade safe around news hours, right? That's very, very important. Follow your plan, follow your strategy, and hopefully you profit. So I hope this video was helpful or valuable to you. Please check out the macro and high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye-bye.